Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. This is Henry, and today is Friday, April 24th. The time is around 2 a.m. GMT. Today we will be looking at the chart of the Euro Yen. This is a 60 minutes chart here. So we can see that the pair looks to be continuing to move to the downside here, and the structure can be counted as an impulse. We have this 1 and 2 in blue, and then this is 3 4 as a triangle, and then 5, and this is proposed to be ending with 1 in the black degree. Okay, we will take a look zooming out later on to see the larger degree outlook from the Euro Yen. This is the correction is completed with 2 as a zigzag. Then from there we have resume lower again, so we have another 1 2, and then now it could be already in the wave 3 of 3 to the downside. So this is going to be the most aggressive bearish pivot, if you want to call it that way, at 117.2. And we also will talk about some of other alternates here. But first, let me zoom out and give you sort of the main bias. So you can see the arrow here is red. Okay, that means this is it has some sort of bearish bias when the color is red. So again, this is the most aggressive level to be bearish in the pair, right? So now let's zoom out. We will take a look at the daily chart of the Euro Yen, and so this is the daily chart without labels, but this should be able to illustrate the bias here. Now today Euro Yen managed to, as you can see, this is a daily chart again. It managed to sort of break below all this previous low that you can see in the 2020 on March, and then also 2019 September. So it broke all this low, so that is telling us that it has already resumed to the downside, right? You can see the daily, it continues to make a lower low and lower high, and it made another lower low, practically below all the previous low all the way to 2018, right? So if we take a look at it from 2018, we can see that this cycle here could be ended here, I think, and then this could be counted as your sort of correction if you want. So you can see a trend line break here. So this looks to be a new cycle instead of part of the same cycle that comes down from 2018. So you have one cycle here ended at on the September 2019. Then you have a correction that ended on January 2020, right? And then from there, the pair has been able to resume to the downside by breaking below this previous low. So this could be a new cycle that comes down all the way from 2018 here. So we have a bearish sequence here, so we got a lower low sequence again here. And then also if you focus on the one that comes down from January 2020, you also got a sequence here. You can see right here, this 1 2, and then now you got another low. So if we just focus on the shorter cycle, then we'll just focusing on this cycle that comes down from January 2020 here. We got this cycle or this sequence here. So technically, okay, assuming this is a simple whatever like ABC or WXY3 swings, then you can see that we could potentially go to the minimum target, which is the 100%, which comes at 114.5, right? So that will be sort of the short-term target on the downside. If we just if we just look for equality here in the sequence, that should give us around 114.6 or 114.5 to the downside. Now as we see earlier, this wave 2 here, 117.2, which is the most aggressive invalidation level, that comes at around here, right? This is the most aggressive bearish level, bearish pivot in the 1 hour chart. But if you look at it from the higher degree, I think the more important level here to be bearish on this pair is this one. This is really the key level here, in which you got this sequence, lower low sequence here, right? That's the key level, 121. As long as this level, which is the more important level, is holding, regardless what type of structure it is playing out, we are still likely gonna see more downside. Now I think even this level is also better than the 117. This level here around 118.7, I think that will be a better sort of bearish pivot, right? So this is the most aggressive pivot, and this one right here, this is the April the 9th. Let me zoom in a bit. That will be the more important level to be sort of to be considered, right? Now I think in terms of alternates, I think we can count this now, instead of calling 1 and 2 in black here. So let's put this into perspective. If I go to the daily chart, this is your 1 and 2 here. Now instead of this, I think what can possibly happen is that we are still within wave 1 from here, right? So that's your wave, that's your 5 waves down that comes from April 7th, right? So instead of calling 1 and 2 ending here, and then we're just going to continue to go down, we could still be part of wave 1. Now the only difference with that is that the rally is going to be a little bit bigger rally. So instead of just correcting this and staying below 117 and go down, this could potentially end this thing here as a 5 waves. So this new low here could be still part of the same wave 1, and then we could see a bigger bounce from there, something like a bigger 3 bounce. So I think if you just rely on 117, so you can, basically that level can be broken if this alternate playing out. So we can be doing something like this, then turns lower again. Okay, so I think the bottom line is the bias is clear in the euro yen. This is the most aggressive pivot, and then the alternate is that we are correcting this cycle instead. Now if we are correcting this cycle, we're gonna get a bigger bounce, but it still doesn't change the idea that the bias remains to the downside. Okay, so hope you enjoyed the video. Please do like and subscribe, and also check us out. We have 14 days free trial, and we do give a lot of analysis in 72 instrument. I will provide the link to our free trial in the description of the video below. See you all again. Have a good weekend, everyone, and see you all next week.